Thank you for joining me. I'm Alex, and I want to talk about Macy's because I want to illustrate one point about dividend investing that is pretty important. So, what they do is retail, and they're mostly in malls. Current price $16.47, which gives them a market cap of just over $5 billion. So, not a huge company, but also not tiny. Dividend yield currently over 9% with a payout ratio of 49%. Revenue $25 billion, earnings $1.1 billion. Earnings are down quite significantly, and as you can see from the forward PE, they're trending downwards, not upwards, which is always a really bad sign. The major problem here is also that it's a really good economy, and the economy is growing while the earnings are going down, and the revenue, I would say, is stagnating. It's definitely not going up at this point. It's been trending downwards over the past few years. Right now, obviously up compared to the previous year, but not by much, and trailing 12 months is pretty much in line with the 25.7. I think it's 25.4-ish. So there's no growth there right now. That doesn't mean there's not going to be growth, but right now it doesn't look great. Total assets $19.2 billion, total liabilities $12.8 billion, which give them total stockholders' equity of $6.4 billion, which is obviously not terrible. And there's another thing that you can see here, which is that the stockholders' equity is actually higher than the market cap. So what that all put together means is that Wall Street does not trust Macy's to be worth what their equity says they're worth, which is something that you don't really see a whole lot. Also, a 9% dividend yield with a 49% payout ratio, you don't see that a lot. And what that means is that the stock price is not going up. The stock has gone down significantly, and usually when you see such a high dividend yield with a fairly low payout ratio, and especially a PE of under 10, it's generally because the stock is going down rather than their earnings having gone up. So to sum that all up, the problem is that you can't be sure that the company is going to be around in 10 years, and as such, if you lose all your money in 10 years, then the 9% dividend yield does not make you enough money to make up for that. So you need to be very careful about what kind of companies you invest in and what their long-term prospects are. On the other hand, we have a company that's still profitable and actually significantly profitable. So there is definitely something here. There's definitely something they're doing right. And they just announced that they're going to close 125 stores and laying off 2,000 employees. So they know that there is danger, obviously, and they're trying to address that. And they obviously don't want to turn into JCPenney. So with that said, I still own Macy's because I've done this stock analysis before, and even then the dividend yield was amazing and the PE was amazing. It was under 5 at that point. Now it's slightly over 5. And I could not help myself but buy the stock because their numbers are still good. So I really don't think that the stock price is entirely justified here. I think that the stock price should be at least double where it is right now. And if they continue to deliver earnings over the next 2-3 years, I think that their stock price will definitely go back up to where it should be, which is with the long-term prospects, maybe in the 40s-ish, but definitely not in the mid-teens. So I really don't think that the stock price should be this low, and for that reason alone, I will continue buying this stock. And obviously a dividend yield of 9% is pretty nice as well. So do your own research, obviously, but keep an eye on this stock. And if you do buy the stock, keep an eye on it, because if things go south, you don't want to hold on till they trade in the penny stocks. So for dividend investors, this is obviously a great stock to look into. Try to come to your own conclusions about where their long-term prospects are. I personally believe that they'll be around for a long time because Amazon has pretty much done all they could to disrupt pretty much all of retail. So I'm not sure if Amazon can continue to put this much pressure on brick and mortar retailers. And with that said, I don't think that they're going out of business, and I don't think that the rest of brick and mortar and mall stores are going out of business. It was just, I think that there were way too many malls for the customers, and the unprofitable ones have been closed. And obviously there are still profitable ones, and they will probably continue to stick around. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.